Hello, I'm Mark Abssy, Head of Indexing at Tematica Research, and welcome to the week ahead. So, last week was kind of a bit of a roller coaster, right? We started out trying to get over the comments that Walmart had about the consumer. Those seem to be confirmed by consumer confidence coming out about a 98 handle. It was expected to be 103, definitely lower than expectations. But honestly, maybe put us back to levels we saw in Q2 of last year. For reference, consumer confidence hit about 85 during the kind of depths of COVID. So yes, a lower number, definitely under expectations. But again, we've seen worse in the last little while. So just something to keep an eye on. Speaking of a consumer, this coming week, and I'll talk about that in a little bit, we have a lot of consumer companies reporting, so we're going to get either a confirmation of what Walmart was saying or a bit of a refute, if you wish. Now, we then went to NVIDIA earnings, and honestly, they had a pretty good quarter, and the guidance that they gave wasn't that bad either. But the market just expects so much from this company that it just wasn't enough, right? So we saw shares trade off pretty sharply, and that kind of set the tone for tech in general, for the back half of the week. Friday, we got PCE, and that was in line. And so everybody kind of relaxed a little. It was okay. People starting to realize that there is more to this market than NVIDIA. Although, honestly, if you look at some of the numbers, you might not think that. So PCE came in line. Everyone was kind of settling down. And then the Atlanta Fed put out its notice to say, hey, guys, we're thinking we're seeing Q1 GDP down around a negative 1.5%. Now, the previous forecast was positive 2.3%. And, while that's a pretty big jump in top-line number, when you look at what was driving all of that, essentially 100% of what was driving all that was their expectations for net exports. Now, I'm not going to go down too much of a rabbit hole here, but when you look at exports for the U.S., and I did go to the census.gov site where they track all this information, the notice there was basically that due to funding cuts, they do not update this information anymore. The latest update that they had was from February 5th. So I took a look at 2024 year-end numbers. And wouldn't you know it, the countries that we export the most to, our top three countries for exports, are in order: Mexico, Canada, and China. Right? Mexico, about 17% of our exports, Canada 16%, and China about 7%. So, clearly they are taking the cue from Trump's tariff warnings, I guess, promises, I don't know, whatever you want to call them, which, by the way, go into effect on Tuesday of this week. You'll remember that they were to go into effect in the beginning of February. There was a 1 month reprieve, and then apparently, we haven't heard anything from the White House yet as to any extensions or further negotiations on those. So it looks like we are indeed going to go with tariffs on Canada, Mexico, and China effective on Tuesday. So, we really have to see what this week's earnings are going to say about that with the forward guidance, right? And when you look at those companies that are reporting this week, I said that we were kind of consumer heavy. There's a lot of them. There's some big ones here with Costco and BJ's. There's also just lots of them: Target, Best Buy, Macy's, Ross Stores, Nordstrom, the Gap and Foot Locker, Abercrombie and Fitch. Interestingly, also, LendingTree is scheduled to report as well. So we're interested to hear kind of about the state of the borrowing consumer. This Friday, we also get consumer credit, so that'll be an interesting number to look for. And so again, we know that Walmart does a lot of business. We know that they're kind of a bellwether with the U.S. consumer. Let's see if their compatriots are going to confirm what they're saying and see the same thing, or if they're saying something different. In terms of other earnings, There's a little bit of an update on cyber. Okta, CrowdStrike, Zscaler are going to be reporting. It's going to be interesting to hear their comments, especially with reference to the Department of Defense apparently telling Department of Defense cyber folks, hey, lay off paying too much attention to Russia. Thanks. So, clearly a big player. We're not sure if this is strictly on the kind of military front, if they're making specific reference to the U.S.'s efforts to help combat, cyber attacks and aid Ukraine in their war with Russia, or if there's something else going on there. My sense is it's probably the thing I just mentioned about, hey, take it easy on Russia, let Ukraine do its own thing. They're not explicitly saying that, but those comments came from the DoD and apparently do not affect any realms outside of the DoD, i.e. the NSA and other cyber security areas within the U.S. government. Another name that's going to be reporting, and I only mention it because increasingly it's kind of tagged on as another of the Mag 7, which is Broadcom, and they increasingly have been a driver and been grouped in the Mag 7 with driving tech and ultimately, kind of driving index returns. Excuse me. Now, speaking of the indexes, last week I think was interesting because when you look at the S&P, and we tend to do this by looking at SPY, the S&P 500, the Spider S&P 500 ETF, and it's interesting because the names I talked about just then, the Mag 7 names, and some others, including Palantir and Broadcom, they constitute the 10 worst performers of the last week for SPY. And I think SPY, the fund, was down about 96 basis points, right? When you look at the advanced decline line for SPY, it actually was okay. Advances were 302, declines were 201. But when you look at the top 10 and bottom 10 performing names in the fund, the bottom 10 performing names, they accounted for about almost 35% of the fund. And their contribution to return, it was 162%. So, Meta, Palantir, Amazon, Alphabet, Apple, Microsoft, Broadcom, Tesla, and NVIDIA, in order from kind of least worst to worst in terms of contribution to return, were those names. They accounted for 35% of the fund, and they contributed to 162% of the fund's return, that negative 96 basis points. Now, looking at the top 10, again, some good returns here. 7% returns from Berkshire, 5% returns from Eli, Visa coming in 4%, Walmart coming in 4%, MasterCard coming in about 3.5%, Intuit coming in about 8.5%, RTX Corp coming in about, just under 8%. But the weight of these in the index, just under 8.5%. So, even though the kind of broader market actually didn't have that bad a week, you've got this weight now, which again, in the boom times, fine, great, let these things run, they're dragging the indexes higher, that's awesome. But now that the tables, I wouldn't say that they are turning, but there's certainly all this weight in the index is not doing it any favors, right? And I'm interested to see not only if there's going to be other exchange traded funds that come out that are XMAG 7 or XMAG 8 or 9 or whatever you want to call it, or to see if there are advisors out there that are starting to embrace more direct indexing, right? Direct indexing is something that it's been around for a while. I think that it's gotten a lot of promotion because of its kind of tax advantage capabilities or the ability to manage taxes. Frankly, I think that's kind of a wrong way to go about it in terms of promoting it as a substitution or as a substitute for managed products, simply because, yes, you can manage your tax lots and all that kind of stuff, but the real benefit for me is you can choose what you want. If you want, SPY without Mag 7, you can do that. Or if you want to have some optimized SPY or whatever it is, you can do that, right? You don't have to worry necessarily about, from a diversification perspective, all the kind of rules and regs that come with a 40 Act type product. That's just something to think about for anybody who thinks about those things. So, again, looking into this week, talked about earnings. It's kind of a light calendar from economics. We've got claims on Thursday. We've got unemployment on Friday. Consumer credit I mentioned on Friday. Claims are expected to come down a little to 230 from 242. We'll see what happens. And unemployment so far is expected to remain unchanged at 4%. Now, of course, we'll have to see what is happening with federal payrolls. Clearly, those have been affected. There are a number of ongoing suits and whatnot to try and roll those back. But again, we have to see what is what. One final thing I want to talk about doesn't necessarily affect equities, but for those of you that follow crypto, earlier on Sunday, Trump was making comments, I believe, down in Miami, and he mentioned again the Bitcoin reserve, and for the first time mentioned specific cryptocurrencies that would be included in the reserve, and those would include Bitcoin, Ether, which is a coin for Ethereum network, XRP, which is a coin for Ripple, Solana, which is again the coin for Solana, and ADA, which is the Cardano coin. And very quickly, so Bitcoin represents about 60% of cryptocurrency landscape right now. Bitcoin, of course, is the original, and from a utility perspective, right, they are the original ones that did the distributed database product, right? So blockchain, distributed network, people work to verify transactions, and it's immutable, meaning not one person can go and just make changes. Great. Ethereum is about 10%, or Ether is about 10% of the cryptocurrency market. They took what Bitcoin did in terms of blockchain and kind of made it smarter, right? So people talk about Ethereum network in terms of contracts, right? Smart contracts. So it's not just a data repository like blockchain, but it's data that you can do things with. Okay. XRP, Ripple, I think it made headlines years ago because it came out and it was really about kind of currency transactions. It was really meant to be kind of a modern day replacement for the SWIFT network, right? The SWIFT network is what's used to transfer currencies across the world. They came up with Ripple, launched the XRP token, and were promptly sued by governments all over the world saying, what are you doing issuing this thing? Don't you know that this is a security and you didn't register it as a security? So, XRP kind of went away for a little bit. The network, however, is still, running. They're still working with it. XRP/Ripple, it's about 5% of cryptocurrency landscape. Solana and Cardano. Solana's about 3% of the crypto landscape. ADA, or the Cardano, is about 1%. And those are essentially kind of newer, faster, better versions of the Ethereum network, right? Where they're talking about smart contracts and expanding the functionality of those contracts, right? And so when I say smart contracts, think of, say you have a tanker full of oil, it leaves port somewhere from the Middle East. Now, on the way to its home port, that oil or portions of that shipment or whatever are being traded. They're trading hands. People are buying them, selling them based on fluctuations in the price, based on supply and demand, whatever it is. And basically, kind of in the old days, those transactions would occur, but they would occur with like, okay, I'll get to my fax machine and I'll send this, or I'll send an email or whatever. But the point is that you had all this data flying all over the place, and it was just honestly kind of a pain to manage these transactions. Say you have that shipment on the Ethereum network or the Solana network or the Cardano. That's a centralized place where, assuming that everybody who's in that network or on that chain is verified user and all that kind of stuff, those transactions just happen. All the paperwork is there, everything is done, and it's pretty much instantaneous, right? It just makes things so much easier and auditable and transparent and all these kinds of things. So, there's a lot of real world application for these technologies. Ultimately, yeah, there probably will be one standard that's going to be applied, but we're still in the space where, people think up new things and want to implement it, right? The guys who came up with Cardano were actually part of the group that initially developed Ethereum. And they said, hey, we think that Ethereum can do some things a lot better. And basically the folks who were then managing Ethereum said, yeah, I know, probably, but, here's where we are. So they split off and built their own thing, right? Markets at work. So bottom line with this is it does look like there is going to be a cryptocurrency strategic reserve, and we're, going to keep track of that and see what's going on. So those are the coins: Bitcoin, Ether, XRP, Solana, Cardano, and they did see some bumps over the weekend. Undoubtedly, we're going to see more action in them during the week. Excuse me. So that's what's going on. Hope you guys have a good week, and we'll see you next time.